Hey guys, it's Sasha. The stock market was already in a nosedive in September, down 25% so far this year, but yesterday something really bad happened that could well be a signal of much worse things to come. This morning, the stock market is only just beginning to process what this actually means. The S&P 500 opened 2% down, and technology stocks are leading the sell-off that could intensify in the coming days. All this despite strong employment data that was published just before the markets opened, with unemployment falling 0.2% to just 3.5%. And on the surface, nothing too major has happened, but AMD, of all companies, posted an update with the SEC last night, and this update could change everything. Whether you invest in AMD or have never heard of the company before, this is really important. So last night, AMD published their preliminary third quarter 2022 financial results. And you might say, so what? We're in earnings season now. Companies publish results all the time, except this was no regular set of financial results. AMD published this preliminary note as a warning. Their full results will only come out on November 1st in a few weeks' time, but they had to publish this preamble because the results are so exceptionally ugly. And specifically, AMD is on track to make $5.6 billion worth of revenue in Q3 when they forecasted it to be $6.7 billion just 2 months ago. This is nothing short of extraordinary, and it's not just the gaping 16% miss on their revenue target and a drop on the gross margin. No, things are much worse, because if you look further down in the report, the preliminary revenue data is split by segment. And you can see in here, data center looks like it did okay. Revenue grew by 45% year on year, but just last quarter, data center revenue was going up by 83% year on year. So this is a huge drop in the growth rate. But then the very next line is client. And client sales are down 40% year on year. This is huge. I cannot state how big this is. Last quarter, client sales were up 25% year on year, so this is an enormous swing. It is less than half of what AMD made in this segment in Q2 last quarter, and this is why it is really important. The client segment for AMD is the regular retail customers buying computers and computer components. And over the last quarter, we have seen inflation take hold and the energy crisis explode in Europe and spread around the world. And the question that every investor has been asking, or should have been asking, is what does this mean for demand? Are we about to have the biggest demand crunch in a generation? Because when people are choosing between paying for heating or paying for food, they are probably not choosing to go out and buy a new laptop. And the answer is right there in AMD's preliminary results. It is dire. AMD's gaming segment grew by 32% last quarter, but only 14% in Q3. So I guess buying an Xbox sits somewhat higher on the priority list, but we are seeing a very sharp decline in demand, especially sharp with retail consumers buying non-essential goods. But also the demand is dropping in business sales as well. You can ignore this embedded segment further down. It is up 1,549% because AMD recently acquired a company called Xilinx that sells embedded chips. But here's what Dr. Lisa Su, the CEO of AMD, had to say. The PC market weakened significantly in the quarter. While our product portfolio remains very strong, macroeconomic conditions drove lower than expected PC demand and a significant inventory correction across the PC supply chain. As we navigate the current market conditions, we are pleased with the performance of our data center, embedded, and gaming segments, and the strength of our diversified business model and balance sheet, blah, 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 blah. So AMD is saying that they saw a very sharp drop in people buying new processors, new computers with new processors, and less severe but still very significant drops across the business. And after seeing this report, you take a step back and begin remembering other things that have been coming out recently. We've had Tesla posting a big miss on deliveries. Tesla delivered 22,000 cars less than they produced, something that has never happened before. And Tesla said that this is due to logistics issues. All the cars are in transit. I'm guessing maybe we're going to get a bit more color on this on the earnings call. But suddenly you juxtapose those two situations and begin asking questions. At the same time, wait times for Tesla cars are coming down quickly, and Troy Teslike on Twitter estimates that the backlog has dropped from 476,000 cars at the end of July to just 317,000 cars in September. Now, Tesla had a big drop in production during Q2 because the Shanghai factory was shut for large chunks of it because of China's zero COVID policy, and the Shanghai and Berlin factories then went through a major upgrade which also closed the factories down in July, so that may explain in part why the backlog built up all the way to the end of July and is now coming back down. But is that the whole story? Now, 2 days ago, OPEC Plus decided to cut oil production to push oil prices back up. OPEC is a cartel of Middle Eastern, African, and South American oil producers that make up around 30% of the world's total oil production. And OPEC Plus goes and adds Russia, Azerbaijan, Bahrain, and a whole bunch of other countries which together make up almost half of the total global oil supply. After Russia invaded Ukraine, oil prices blew up to $120, but have been dropping ever since the peak in June. And naturally enough, Putin and Saudi Arabia thought, hey, let's collude and make some more money while the whole world is screwed, drop production so that the price goes up. And you can see that the announcement about a drop in production is having an immediate effect as Brent crude is pushing back to above $96. And it did not take long for this to filter down to the pockets of cash-strapped drivers. California just recorded their record ever gas prices at the pumps yesterday. And this OPEC decision will contribute to inflation increasing from October onwards. August inflation data benefited from natural gas and oil prices dropping heavily, which countered everything else that was going up at the same time, and we are likely to see the same thing happen in September, which is very dangerous. Oil prices dropped in September, but gas prices dropped even more, and this could once again mask the big increases in the cost of food, shelter, and all the other CPI components. So when we see the data come out next week, it is very possible that the headline figures will look good. We might even see a drop in the overall number, and all the media will come out and celebrate once again, saying that inflation has been defeated, it's over, and the Fed might as well just stop increasing interest rates like they did last time. But a month from now, the picture could start looking a whole lot more ugly. And while inflation is sitting at these unprecedented levels, it is eroding incomes because wages are going up much more slowly than inflation. And that means that in real terms, wages are falling. The official figure is that real wages, inflation-adjusted wages, have fallen by 3.4% year on year as of August. But if you were to take a more realistic measure of inflation based on things like food, rent, gas prices at the pump, and ignore things like the cost of new clothes and the cost of brand new cars, you're looking at an inflation rate that is more like 15 or 20%. And for many people, that means that every dollar you earn today is worth 10% less in terms of what you can buy with it than last year. And you know what? People are going to buy fewer new computers. People will probably cancel their Netflix subscriptions. They will buy fewer new iPhones. And maybe the Black Friday and Christmas shopping budgets are going to take a haircut. Wall Street analysts seem to have mostly missed this announcement from AMD last night. It's certainly not the talking point on any mainstream financial media. But the big question for me is AMD the canary in the mine? Are we seeing the first signs of a drastic demand destruction? Demand destruction that is not yet caused by the Fed's rate hikes, that is going to filter through in time as well and potentially make things worse, but instead caused by a very, very serious squeeze on people's spending power. I am a small business owner, and in the last few weeks, I have noticed a very alarming anecdotal trend. The number of people who have asked for pay rises has exploded. This sort of thing was extremely rare last year and before that, but it is hardly surprising that it is happening now. People are becoming very desperate. And the question I'm asking myself is AMD just the first note that we are seeing? Are we in for a few quarters of demand caving in and the results of inflation taking hold in really bad kind of ways? Are we going to see other big companies start posting warnings ahead of earnings in the next couple of days? Maybe next quarter, maybe the quarter after that. Because every company that sells goods and services could be the next one on the list, especially if their goods and services are not bare bones essential. Can people skip the iPhone 14 and live with a cracked screen for another year? Yeah, probably. Do people need to replace their 5-year-old car? Or maybe better be prudent, save up some cash, keep it in the bank just in case you need it. Can you chill without paying Netflix $20 a month? All very interesting questions that I will be paying a lot of attention to as we see the Q3 results come through and then the Q4 results after that. Even more interesting, will there be some winners among this carnage? Are banks going to make bank on the back of high interest rates, or will higher default rates crush them like in 2008 because people can't pay their bills? Will we see gig economy enablers retailers like Fiverr, Upwork, or Etsy suddenly blow up as people flock to them to try to make some extra money? Or will the businesses stop hiring freelancers on those platforms instead to batten down the hatches ahead of the storm? It is incredibly hard to tell at the moment. The one thing that does seem certain is that it's going to be very, very choppy out there. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, I really appreciate it, and as always, I'll see you guys later.